In an effort to address concerns regarding its financial strength, Credit Suisse announced plans to raise capital through the sale of convertible bonds, more divestitures, and other cost-saving programs. YHOO reported earnings last night that were better than analyst estimates, but profits still declined 4% from last year. I'm Taylor Schranz, and the morning call starts right now.
Good morning, I'm Scott Rutherford, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the morning call. Stock futures this morning are pointing to a flat to slightly down open. Ben Bernanke goes from the Senate yesterday to the Hill today. What can we expect to hear from him?
I think we're going to hear more of the same. He's going to talk about the economy, he's going to talk about growth slowing, everything that's going wrong, but it's not wrong enough for them to actually come out and do something different. You know, a lot of people yesterday were expecting for him to announce the when, not the if. Is it going to start in August? Is it going to start September 13th? And he didn't allude to either one. So everyone's trying to make like there are hints in there when it could happen, when meanwhile, who knows? The bottom line is the market sold off at first and then regrouped, grinded all day. And this pattern or this ascending channel that all you have to do is, navigate it, that has been making money is still intact. So until that changes, I think you have to just keep things simple.
Yeah, yesterday was definitely a frustrating day for traders. So why don't we take a look at the charts, though?
Okay, well, you look here at the chart of the S&P, you will see that ever since the low here back in late May, or actually this low was actually on June 4th, we've had a series of higher lows. You had a low, higher low, higher low, so we've been following this intermediate trend. Yes, along the way we had the inverted head and shoulders pattern that's still working its way out. Same way earlier on before we put the top in, we had this head and shoulders top pattern that helped give us clues of this actual decline. So patterns change a few times over the course of the year, and right now we're coming into another inflection point. All right, at this point, I see a wedge type pattern. I see a macro wedge that will be coming into play pretty soon. Okay, you have a series of lower highs. Here's your high, lower high, another lower high. This is, it's been controlling ever since the top was put in April. Same way this has been controlled ever since we put the bottom in June. So at this point, we're coming to an inflection point. A lot of people are trying to cheat one way or another. Some people think we're going to blow through this 1375 and get back up to 1400. And some people say, how could this happen with everything going on in the world? We're going to break this, and they're taking sides. So at this point, I'm not taking sides. I'm going to wait for some type of resolution. I'm going to wait for it actually to be more visible, because if you try and anticipate, it's very easy to be wrong and it can cost you a lot of money. So at this point, I just think a little bit of less is more tactical trading. And then when we get more clarity and we get through the summer and a lot of these headlines, then maybe we'll be able to sink our teeth into, a few things a little bit better.
Well, we are in the midst of earnings season, so in the sector spotlight, we're going to take a look at some specific stocks and see where they're at and if they're tradable here. We'll start off with WYNN. These guys reported earnings last night. EPS beat estimates, but revenue in Las Vegas and Macau were both lower year over last year. And Macau's an important market for these guys. 2/3 of their business is there. They just pretty much doubled down on the market. They're building a new casino just as growth is slowing in China, and they're up against tougher comparisons. But the stock's been down 28% since the beginning of May going into this earnings report. So is it down enough to, just let this report go by?
So I think that's what traders are going to look to see if it's actually priced in. Because besides the 28% move we've seen since May, this stock put an outside day in well before it. So it's been down even more than that. So is this slowdown priced in? If you look at the chart here, you could have seen a lot of different things to stay out of trouble here. If you guys remember this blatant outside day that came in, right around here, and that was actually that was almost a year ago, right? 7/19/11, and then you had a rally back up, another outside day, and then recently, you just talked about the high that was put in right here, okay? And the stock was trading about 135. If you take a closer look, you will see this outside day, very, very blaring, right? Opened up, traded on the lows. That's a sell signal, everybody. Then you have this ascending channel that broke to the downside right here at 125, another way out of this stock. And since then, you had this precipitous decline. Now we're hovering right here near the lows. So at this point, are they going to sell it? Based on the fact that they just missed, or can it hold? So for me, I'm going to see how it acts today. You have a reference or a spot to trade against. If this stock could hold above 95.10 perhaps you get a little bit of a move back. I wouldn't say today, but today you could maybe see 99, 100. But if we can't hold right here, I do think that the writing's on the wall with the technicals here, that this stock, if you go to your weekly chart, it could see a lot lower prices. Look where it is. Oh my, wow. It could see a lot lower prices, actually. If you get a bigger picture sometimes when you look at more of the weekly, but there's no reason why if we can't hold 95, this stock can't see at least 80 bucks. So just be careful here.
YHOO also reported earnings last night, a day after they announced their new CEO, former Google exec Marissa Mayer. Earnings beat, and they did see advertising sales increase a little bit, but they're facing increased competition from Google and Facebook. This stock's been stuck in a $15 range for quite a while now.
I bet you a lot of the shareholders wish they took that $32 bid and didn't ask for 36 back. I don't even remember when that was. That was a few years back.
Yeah.
Anyway, if you look at this chart, though, kind of interesting. Kind of. Okay, you see a channel here. I like channels because that means there's been accumulation by some type of institutions out there. It's been going on for a while. Anyone trading in this channel is pulling their hair out. So at this point, I don't think you need to be in YHOO unless you're a huge YHOO fan, which I don't know why you would be. If you are in it long, I would say you could use this as your stop. I would use 1439, but as a trader, I don't think you have to touch this thing until it gets above 1630, stays above it, and then maybe you get a move up to the moving average right here. At this point, I don't think this quarter is going to be the quarter that breaks it above this range. So just have it in your little trusty trading manual, 16 and a 30, 1630 on major volume. That's your entry.
Intel also reported earnings. This was kind of disappointing. They brought sales guidance down for the full year, which wasn't a surprise. They said the PC market was slowing, and as well as a slower macro environment impacted them. We heard the same sort of story from Applied Materials last week. But did they take guidance down enough to give investors confidence going forward?
At this point, no one could say, or everyone can guess whether or not it's been enough, because it has had a big multi-year move over the past 2-3 years, and it just also had a little micro correction from the top that was put in right around 29. So the question is it priced in? The action will tell us over the next day or so. So if you look at the chart here, you will see here is that push-through failure, sell signal number 1. Here is when it broke this ascending channel, another sell signal. Here is your retest. And since then, it's just come in. And now it's trying to hold this lower area, this 2460 area. So at this point, you have massive resistance that comes in right around 26. And then you have this support. If Intel were to break below this support today, because it's opening right around 25, you're going to see some weakness in the overall technology. If it could hold this 2460 area, maybe it tries to go sideways a little bit and have it priced in. But at this point, if you're not in Intel, I don't think you still need to be in a rush to buy it, because it has a lot to prove and we have a long summer ahead of us. If you're in it, at this point and you miss some of these sell signals, I still think you could sit in it. But if you're not committed, there's your stop, 2470.
VMware had a bit of a management shakeup last night. Their own 80% of this stock is owned by EMC, and EMC took their CEO, Pat Gelsinger, and put him in as a CEO, replacing the current CEO at VMware. And they also announced that revenues for the quarter were going to be better than expected. So the stock's up on this news today.
Yeah, and that's why you also can't just take these things short. Because of the way they've come down. So if any company comes out with something, even in line, I think they could bounce, because again, most people are thinking you can have a miss here. And if you look at VMW, look at the chart here, look at this shooting star top that was put in back in April. Blaring, right? Tried to break out, failed. I think this was on the last quarter's earnings, actually, which you never want to see them sell. And then, it's just been locked in a downtrend, just downtrending and downtrending, a lot of fears of European slowdown. They have a very big exposure to that, and it closed on a dead low. So here at 80, versus where it was at 115, it could be up a little bit. I don't think you need to be in a rush to buy this one either. If you're in it, you violated some of your sell rules. I would think that the next big, actually on a micro basis, see if it could get above 86. Some might even want a short verse there. If it gets above this, next big level will be the small downtrend that comes into play around 90.
Well, we're going to take a quick commercial break and get back into it with the home builder, so stay tuned.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. We're going to get into it with the home builders. This morning we're waiting to hear housing stats at 8:30. We'll get existing home sales tomorrow. And yesterday we heard that home builder confidence was at the highest level in nearly a decade. Now it's no surprise then that the XHB, the Home Builders Index, has been strong all year. We've been getting better data out of the housing market.
Yeah, the data out of the housing market's been one of the bright spots. You know, as unemployment started to decelerate again, and some of the data started pointing to the slowdown which we've been in. You know, the housing numbers have been a bit better. You have low rates. You have the sector's been battered and bruised. You have houses that were 4 or 5 million at like $1.5 million house. You know, whatever it is. Bottom line is it's been acting very well. And it's a leading sector. It's something to watch because it can give us clues on whether or not that overall macro wedge in the S&P will be resolved to the upside or the downside. So if you look here at the XHB, you will see that this group or ETF is hovering right near the highs. So here's the high that was put in back in May. It's been hovering right in front of it. You have this little bit of a downtrend where most other indices are well below. It's holding above the moving averages. So I would say watch this upper level here. As long as this stays above like 2060, I do still think that we could break out here. And if it starts to break out above 22, it could be a leading indicator to say that the S&Ps could take out 1375. If it starts to falter, breaks this area and comes back in, potentially just like the transports did yesterday where it didn't participate in the rally, maybe it gives some clues that we're going to get a resolution to the downside.
Right. KB Homes, this stock has been up 48% so far this year. Raymond James actually cut their estimate or their rating on this to underperform from market perform yesterday, given that run. They're still about 2.5% from the peak that they reached in March. But do you think that the underperform rating on this one is a little bit aggressive?
Be a little aggressive. It's not leading like some of the other stocks. It's not making new highs, but it did have a nice move off the low. And that's why you have to tactically look at those type of patterns. Right now, I don't even think the stock knows what it wants to do. It's wedging after the move off the low. So if you take a quick look here, wedging makes sense after a move because you go from 7 all the way up to almost 11. People don't know if that's too much. So what you do is you have consolidation here, and it produces a wedge type pattern, which all that is a pause where it's either going to continue this recent trend to the upside, or it was too much and it could correct. So at this particular point, you have resistance here at, what is this, about 1076. If it starts to clear this area, you're going to see continuation to the upside. So at this point, I don't think you really need to guess. If you're in some small, I would stay with some. Traders probably will get aggressive or start to look for a breakout move if it can start to clear this 1050 area. But again, it's not the leader of the group, and you could easily see it go to the downside. I'm not taking any bets here. If you're in anything more than a tier 1, I think you get down to a tier 1. And if you're looking for some type of momentum, it's going to have to clear this area.
Toll Brothers, it's up 47% also this year. It's practically at its 52-week high, but each consolidation we get in this one seems to just push higher. How do you feel about the momentum in this stock?
It's been showing leadership. It's been defying a lot of logic. Everyone's been trying to just short this, but if you've been riding the trend, you're making money. And this is also flagging, but different. This is at the high end of the range, not in the middle end, so it doesn't have as much resistance. So if you look here at Toll, I think it's important to see it continue. It's above all the moving averages. It's near the highs right here. Again, anything that's had a multi-month move, you never want to be too heavy, and you always want to take trades along the way. But at this point, you just had a nice breakout move above this 26. It's consolidating over the recent highs here. So it looks more constructive than destructive. So if this starts to get above, what is this area? This is about 30.50. You could see continuation again. But every time that you have this type of pause, it is always prone to some type of failure. But at this point, it hasn't done that yet, so you have to stay with the trend.
Well, Noir has a similar type chart, I think, to Toll Brothers. It's above all of its moving averages, but it's up about 58% year to date. It is clearly the leader in the group. That makes me a little nervous.
Yes, leaders shouldn't make you nervous. It's just the fact that they keep going. So people either get upset that they missed them, or is this run going to end? And we talk about in this market, you've seen a lot of breakout failures. There's been a lot of charts that once they break to 52-week highs, you always have to make sure they hold them, because if they push through and they fail, like you saw in the chart of even Intel way back when, or some of the other ones, that's a sell signal. That means that the momentum has switched. You sell a little bit, and then you see what happens next. So as far as this one, if you take a quick look, this is Lennar, you also see that it's had a big move. It's wedging up here. It's above the recent highs. There's a lot of reasons to like it still. You look at a little bit more of a macro look. Yes, it's had a huge move. But again, it hasn't broken any trend lines. It's not below the moving average. It's continuing. So, you just want to stay with it until that changes. And it could change when the uptrend gets snapped. But if you look at it, it's been pretty strong and it's intact, and I wouldn't be so worried. So, the key to this market right now is having high level stops and low level stops. Measure your commitment. If you're thinking that you don't want to stay with something, you could always get out, higher, one of those breakout failures. Or if you're trying to play something for an oversold bounce, you could always use your lower level stops.
D.R. Horton, just one last home builder to take a look at. They were upgraded by MKM Partners recently to a buy, and even Kramer was talking about this with me this week earlier, that he's starting to like some of the more marginal home builders. But the stock is also up about 48% year to date.
Yeah, this one, the three of these have been like the three amigos, for the home building stocks, and that's why you always want to stay with the ones acting technically best, because you don't take the pain, if you're in a laggard type stock, even within a strong group. And if you look here, it also, just like the last few, it broke out above a recent high. It's trying to hold it. It's above the moving averages. The 200 days is all the way down here. So it tried to break out on this day, couldn't get any follow through. This is what I was talking about. That's a small sell signal. Okay, but now we're holding higher. So if this thing starts to get above, what is that, about 19, you could see momentum. But I will say I am having a hard time getting any momentum in the stocks that I'm trading. Maybe I'm in some of the wrong stocks, but anytime that I'm in a good position, it's working, and I buy higher to sell higher, it doesn't work. So just be a little careful in this environment, looking for 52-week highs and looking for those breakout trades.
Let's do some quick hits. We'll start with Apple. Are you still trading this one for cash flow?
Yeah, and I think it's still holding around. It's got earnings next Tuesday. There's no really compelling setup right now. The compelling setup was when it broke above 590, went to 619, then came back and retested 590. So if you go to the chart here, I just think now it's kind of in pause mode, waiting for for its own earnings to come out. It's down like $1.50 today because of Intel. I guess some people are thinking because of their lowered guidance, it could affect Mac and PC sales. But again, this really isn't about the Mac for Apple. It's more about the iPhone 5. It's more about the iPad. So at this point, this is acting best as far as high beta land's concerned. As an investor, you own it, you stay with it. And today for cash flow, it's down $1.50. Maybe it goes from negative to positive and has a push. So I'm going to look at it for some type of vehicle today. But I'm also not going to overtrade it, because it could just hang out here and wait for its own report on Tuesday.
Qualcomm reports after the close tonight. The downtrend here has kind of been in control. So what do you see in the chart?
The stock's not expecting anything. It's actually priced for disappointment. So when stocks are priced for disappointment, they even just come in line and you could see a pop. But it's always dangerous trying to pick a bottom in any of these. So at this point, if you look at the chart of Qualcomm, you will see, this is when it got very faulty. You had this last gap down. Remember I talk about how if gaps don't get filled, they usually stay in the same direction of that gap. Well, here's your gap down. Here it came back up, never got filled, showing you downside pressure. That was a red flag to get out of some of your Qualcomm. So now down here into 54, are you going to sell it ahead of earnings? If you're a long-term investor in Qualcomm and you miss some of these other sell setups, you probably don't. If you're a trader, I don't think you take it into the report. Wait till it acts after the report, because a lot of these things give you time after hours versus having the risk. You have this downtrend right here. If it's any kind of positive report or inline report, it gets above 56-ish. You could probably see a nice little snapback. I'm not enamored, or I don't have a gun to my head, so there's no reason why I'm going to take Qualcomm into it, but I'll see the way it's trading and I'll trade it after hours.
Makes sense. IBM also, it's been kind of weak since May going into their earnings report tonight. Is this a similar story, bad earnings expected?
Yeah, it looks exactly like what BMW, so to speak. BMW had a huge move down, a lot of European exposure, the whole ball of wax. PS, you know, the report was a little bit better. It's up $4 or $5. So if you're short IBM going into this and you've been holding it since the upper level here, if you look at IBM, you will see from 210 down to 183. Unless you really have a thesis that IBM is going to miss and miss by a lot, it's going to have to miss by a lot in order to continue this downside. You know, I do see a very big support down here, you know, right around 175. I'd say you go into it flat as an investor. If you're in it and you're in it for a long time, that means you have a long-term thesis. But at this point, here too, I wouldn't make any bets because, you know, it's almost like an oil slick where just inline results will get you a pop. But if it misses, I think that it could be buyable into this area or be somewhat priced in based on the size of the move lower.
Well, we're out of time, but those are the levels of the S&P we're looking at today, some of the sectors and earnings that we're watching. So be sure to check in at the end of the day with Scott and the T3 Live team for the daily recap.